Welcome back to Accounting Recounted. I'm your host, Amanda Hendren, and today's episode is part 3 of our 3-part series on bookkeeping tips for small businesses. If you've made it this far, I just want to thank you for tuning in and listening, and I hope that you've learned a lot so far. In parts 1 and 2, we covered the basics of bookkeeping and tax preparation. So today, we're going to move forward and talk about how you can actually implement what you've learned to set up your bookkeeping processes for your company. Whether you're just starting out or looking to streamline your existing processes, setting up proper accounting practices is essential. So let's get started with the basics. What are the key components of setting up accounting for your business? I have developed a simple 5-step process to get you started. Step 1 is to identify your accounting needs. Determine the specific accounting requirements of your company, such as bookkeeping, financial reporting, payroll management, budgeting, and tax compliance. This will help you establish the foundation for your accounting processes. And during this phase, we also recommend setting up a business bank account if you have not already, to separate your personal and business finances. This is the account that you will use for depositing your income, making payments, and reconciling transactions on behalf of your company. Step 2 is choosing an accounting method, which can either be cash basis or accrual basis accounting. What does that even mean? Basically, cash basis accounting recognizes revenue and expenses when cash is received or paid, while accrual basis accounting records transactions when they actually occur, regardless of when the cash is exchanged. The IRS allows most small businesses to choose between cash and accrual methods. You just have to use the same method for tax reporting as you do for your accounting records. So let's hear an example to compare the two if you still need a little more clarification. Let's say you're a construction company and you secure a major contract, but you will only receive compensation upon the completion of that project. Using cash basis accounting, your company is only able to recognize the revenue when the project is complete, because that's when you're getting the cash. On the other hand, using accrual basis accounting, your company would recognize revenue when you invoice the customer. Cash basis accounting is advantageous because it is simpler and less expensive than accrual-based accounting. And for some small business owners or independent contractors who don't have any inventory, this is a suitable accounting practice. It also gives you an accurate picture of how much cash you have on hand. On the flip side, accrual basis accounting provides a company with the best real-time financial picture available because the method takes into account expenses incurred as well as revenue that's been received and earned. Selecting the right method is important because it impacts your financial reporting and tax obligations. Step 3. Step 3 is that once you have decided which accounting method to use, you need to set up your chart of accounts. Create a chart of accounts to organize your financial transactions and provide structure for recording and classifying financial activities at your company. I recommend starting out by creating broad categories that will serve as a foundation for your chart of accounts, such as assets, liabilities, equity, revenue, and expenses. Depending on your business, you may also have additional categories such as cost of goods sold, payroll expenses, or industry-specific accounts. Then I recommend assigning unique codes to each account within your categories. Codes help identify and sort transactions systematically. I recommend using numbers, but you can use numbers, letters, or a combination of both. The account code should be logical and intuitive, making it easier to navigate and understand your chart of accounts. Within each main category, consider creating sub-accounts to provide further detail. For instance, under expenses, you could have sub-accounts for advertising, rent, utilities, and so on. This level of detail allows for more accurate tracking and analysis of your financial data. It's also important to be sure you're assigning meaningful names and descriptions to each account to ensure clarity and ease of use. Use concise but descriptive names that accurately represent the purpose of each account. Once you have created the initial draft of your chart of accounts, review it carefully to ensure that it aligns with your business requirements. Make any necessary adjustments or additions based on feedback from your accountant or bookkeeper if you have one. As your business evolves, periodically review and update your chart of accounts. Add new accounts as needed or make adjustments to current ones to reflect changes in your operations or reporting requirements. Regular maintenance of your chart of accounts ensures that it remains accurate and relevant. Step number 4 is to choose your accounting software. Choose an accounting software that suits your business needs. Popular options include QuickBooks, Xero, and Wave. The software should support your chosen accounting method, provide all necessary features that you need, and be user-friendly for your accounting team. Step 5 is to establish your financial processes. Define procedures for key financial processes such as invoicing, accounts receivable and payable, payroll processing, and expense reimbursement. Determine who will be responsible for each of these processes and establish guidelines for documentation and approval. Establish a system to store and organize financial documents such as receipts or invoices or bank statements or payroll records. You should also decide on the frequency and types of financial reports that you want to generate. This includes your balance sheet, income statement, and statement of cash flow, and budget reports if you need them. Establish a reporting schedule to track your company's financial health and inform decision-making, and mark them on your calendar so that you don't forget. Familiarize yourself with tax obligations for your business, including income tax, sales tax, payroll tax, and as always, mark your calendar for those too so you don't forget. So that is our 5-step process for setting up accounting processes in your business. I'd like to emphasize the importance of starting early and setting up your accounting systems and processes from the beginning, because it is going to save you so much time and effort in the long run. I don't know of a single successful business owner that wishes that they never set up their bookkeeping, right? This is something that will definitely pay off in the long run. I also recommend investing in your financial literacy. The more you understand about accounting and financial management, the better equipped you will be to make informed decisions on your business's success. And finally, just remember that accounting is not just about compliance. It's also a powerful tool that you can use to drive growth and profitability of your company. That concludes this episode of Accounting Recounted. We hope that you found the information on setting up accounting for your business valuable. Stay tuned for more episodes packed with practical advice to support your entrepreneurial journey. Remember, your success is our mission. Until next time.